Hello, everyone. Welcome back to the channel. If you are new here and this is your first time, welcome. It's all learning. It's all a journey. So in this channel, I'm doing my best to share my journey and to share with you all what has helped me learn in the simplest way, because learning to read the charts and learning to how to use the indicators to read the charts is the more simpler part of the battle, but managing risk what you will learn in the future. I'm sure if some of you have already not learned, is the hardest part about trading. You'll realize that, yeah, okay, I made the money really easily, but then I lost it just as easily. So defense is what's really important in this game. So in these videos, I try to do my best to share with you all what I know and what has helped me along the years. So with that being said, this video is going to be about the Ichimoku cloud. I hope I'm saying that right. I think I'm saying that right. The Ichimoku cloud is a collection of technical indicators, and they show support and resistance levels, as well as identify the trend and momentum. So it does a bunch of different things at once, and it can be really powerful when used properly. The cloud, what it does, it's a leading indicator. So in our previous videos, if you haven't checked those out, please check those out. On the moving averages and the MACD, those are lagging indicators. Now the Ichimoku cloud is a leading indicator, and it is a leading indicator because it attempts to identify what price will do in the future. And so this cloud is composed of 5 lines. Now I only use 2 of those lines, and you'll see that on the charts in a minute, but the cloud is composed of 5 lines. Of those lines, 2 of those lines make up the cloud, and that is the leading span A and a leading span B, which you will see on the charts in a moment. And within that cloud, the difference of those 2 moving averages, or the difference of those 2 lines, that area is what's shaded in. So those lines are the 9 period. The second one is the 26 period. There's an average of those 2, and that is the cloud. There is a 52 period moving average and a lagging closing line. So the way the cloud is used is simple. Is when price is below the cloud, we are considered in a downtrend or bearish, and when price is above the cloud, we are considered in an uptrend or bullish. Now, even though that may be the case, keep in mind that that is when the cloud confirms it. And I will show you what I mean by that here on the charts momentarily. And so by confirming the trend, also what I mean is that the cloud is moving in the same direction as the trend. So if the trend is up and the cloud is moving up, then that's confirmed. If the trend is down and the cloud is moving down, then that's also confirmed. Okay, so that was the introduction for the Ichimoku cloud. There's other information surrounded about it, when it was made, who made it, why they came up with it. You can check those things out online, but here we're just going to go with the basics and how it can be used, because as a beginner it can get a little bit complicated trying to use all 5 of the lines to keep up with at once. So now that you have that information, let's see what it looks like on the charts. All right, guys, so here markets are open. You can see price moving here to the right, but as you can see here, this is what the Ichimoku cloud looks like. Okay, this is what the Ichimoku cloud looks like. So moving over to the left, hovering over Ichimoku, because remember, that's what we do when we want to get to settings. We go to settings. When you first look at the chart and you first put the indicator on the chart, this is what it's will look like. And so the conversion line, the baseline, the lagging span, the leading span A and the leading span B is the salmon color. Those will all be highlighted. The inputs, as you can see, conversion line length 9, baseline length 26, leading span B length 52, and lagging span 26. So I do not bother with the conversion line, the baseline, or the lagging span. I just have on the leading span A, which is the top of the cloud, and the leading span B, which will be the salmon color colored here, this line here. And the cloud here, that is what you can consider the core of the cloud, not corte, the core of the cloud. So that is the core, or that is the cloud. Now, the bigger the core or the bigger the cloud, the more momentum is in of that particular trend. So in this case, we have a uptrend. Notice how price finds support at a level, it breaks up through the cloud. Okay, the further away that price is from the cloud, that is signifying a greater momentum or more bullish sentiment in the market. When the price starts to come back towards the cloud, that is signaling that there is less bullish momentum in the markets for that time, and it is indication of a consolidation. So as you can see here, This cloud forms before this is happening. So what this looks like is the cloud crosses, and let us understand that when the cloud crosses and the top of the cloud, which is the leading span, is on top, then that is bullish sentiment. So over here, the green is the top of the cloud no matter what. So if the top of the cloud is pointing up, then the trend is up like this. Okay, we have the top of the cloud pointing up. We have a trend that goes up. So we have the top of the cloud on top. Price is far away from the cloud. Momentum is confirmed. The mouth of the cloud starts to open wider and wider, confirming that this is in fact a bullish trend and that more bulls are coming into the market. What happens is price is over here starting to turn red. This cloud starts to narrow down, and the narrowing of the cloud is signifying consolidation. So what happens? We consolidate. We come into the cloud, as shown here, where the cloud gets narrow, where the leading span A and leading span B are both starting to touch each other. Are starting to touch each other. At the same time that happens, we get a breakthrough of the cloud. Now, a breakthrough of price through the cloud, whether it be to the downside or to the upside, is a confirmed trend reversal. And what happens is you will get, here we have again, if you've seen my previous videos, what we know as a cross. Okay, so when price was bullish, we were bullish. The cloud was wide, we were above the cloud, we were far away from the cloud. Price started coming towards the cloud, letting us know consolidation was coming. Consolidation came, and then the cloud, look at this right here, the green line, the leading span, the top of the cloud is now on the bottom. So now that the top of the cloud is on the bottom, that is bearish sentiment. Okay, so now that the bearish sentiment is here, look what we have. We have the leading span on the bottom. We have price after consolidating, breaking through the cloud. That let us know that the trend reversal was coming. As you can see, the cloud tried to condense here. It tried to condense and tried to almost curl up on this teeny part here. So it pushed it was down here, and then it pushed it here. It's really small, but you can see it. And when you see it playing out in real life, you'll know. When this, because you have to remember, everything from this point on has not formed yet. So you can't see that cloud. These candles have not formed yet. All you see is the leading span. All you see is the leading span is on the bottom. It's on the bottom, and then it kind of flattens out. It flattens out and price pulls up. So that's this flattening part right here. Price pulls up. We get price pulling up, but look, the leading span points back downward because this points back downward. Bulls tried to come up and push it up, but price just continued to fall. And what you will see when this happens is you will see right here, you will see this right here. You'll see both of the lines at the same time cross to the downside. And that will let you know that the momentum is there and that we are still going to go lower. And then look what happens. We get further and further away from the cloud. The cloud starts to open up. It lets us know that the trend is continuing. And then look at this piece here. Price starts to consolidate and go towards the cloud. And that's what we have here. That is indicated right here at the leading span trying to cross up. Price tried to reverse. The bulls tried to make price reverse. So the leading span starts to point up, but we found rejection here at the leading span, which let us know that we were going to continue go lower. And look what happened. Again, just like up here, right at this line, this will show, you will see this, you will not see any of these candles here. It will more than likely be on this green candle here or the close of this red candle. And then at this red candle, you will see the lines both point downward, letting you know that bears were coming into the market strong again. And when I get signals like that, I take the trade. And what do you see? The cloud flushes down, it opens up, because remember, this is a leading span. So as this is opening up, this price action is happening. And then once the lagging span starts to come down towards the leading span, that lets you know that what? Remember I said consolidation is coming in. So that lets you know consolidation is here, and then price starts to consolidate and move towards the cloud. When I get to areas like this where the cloud is flat, if you notice this whole part of the cloud this whole part of the cloud is flat. It is not pointing up. It is not pointing down. So to me, that is consolidation in a longer term. If you look on a larger chart, there will be consolidation on a longer term. But for me, I'm either carefully scalping this or just try to stay away from it if the market is doing that, because usually I just get slaughtered when I see trades like that. But so as you can see here, the leading span crossed to the top. The cloud was pushed up, confirming the move to the upside. We're moving away from the cloud, and this was a nice bullish move to the upside. And these are the live markets. So again, right now for me, the trade will be off. We're going sideways, and we're probably going to do this. The market is probably in hangover right now from the election and from the run up yesterday. So it's not really doing anything, as you can see. So guys, that is simply how you use the Ichimoku cloud. If you are above the cloud, you are bullish. If you are below the cloud, you are bearish. But we want to make sure that we are far away from the cloud, that there is a lot of space in between the trend and the cloud, or if the cloud is riding the trend closely, that we are finding support above it and away from it, and that the cloud is wide enough to let us know that the momentum is still in the market in that direction. When the cloud starts to condense, price starts to condense. When price breaks through the cloud, that is a signal of a reversal, whether it's breaking through to the downside or breaking up to the upside. So guys, that is simply how you use the Ichimoku cloud. If you found value in this video, consider liking, subscribing, turning on the notification bell so that you will be notified when I make videos like this if you are finding value. If there's any video that you guys would like me to cover, like I said previously, I do have a list of videos I'm getting to. And so if you have a video in mind that you would like me to do and I have knowledge on it, go ahead and drop it in the comments. I don't mind covering that video. I'll add it to my list. God bless you all. Trade well, and I will see you in the next one.